And it's another trading day right here in Lagos, Nigeria, and we're going to give you everything that's playing out in most of these markets that we track. Here's what's coming up. Data from Africa, the big deal, shows startups across Africa raised a total of $343 million in April. And Egypt's non-oil private sector economy that contracted further in April after a decline in domestic and foreign demand. And shining, we see gold prices rise to a two-week high today as tariff threats from U.S. President Donald Trump, that's lifted demand. And it's great to have you join us. I'm Ladi Williams. Let's get a check on the commodities market straight up now. We see, recovery there for the oil market. That we see Brent $61.38 a barrel, up a big 2.10%. WTI crude still below Brent as usual, $58.24 a barrel, a bigger 2.20% jump there. The first gain for this consecutive weeks now, with both benchmarks, it's settled at their lowest since February 2021, driven by an OPEC Plus decision over the weekend to further speed up oil production hikes for a second consecutive month. And we did see the impact on the prices there. Definitely, prices don't like more supply. That affects the prices and takes it lower. So let's get a check on the metals market now. See gold prices, they rose to a two-week high today as tariff threats from U.S. President Donald Trump lifted demand for the safe haven metal, while the Federal Reserve's policy decision, markets are bracing for that one. And we see a big 1.40% jump for spot gold, $3,380 per ounce. And we see U.S. gold futures with a bigger 2%. So it's green across board today, unlike yesterday where we see platinum and palladium. That lagged yesterday. But spot silver, that's trying to also get a shine there, 1.50% up, $32.99 per ounce. So that's how the metals market is looking today, quite green. To other stories now, the electricity distribution companies, they billed consumers a total of 496.14 billion naira for electricity supplied in the first 2 months of 2025. This is according to latest data from the Nigerian Electricity Regulatory Commission. However, only 75% of this amount, that's approximately 372 billion naira, was recovered, leaving a significant 25% shortfall in collections. The 2-month data indicated that in January, total billing by 12 discos is about 250 billion naira, while the amount collected was 178.68 billion naira, whereas in February, the electricity distributors billed a total amount of 245.93 billion naira, but got a revenue of 191.75 billion naira. Well, fed up with your bank? Well, you're not alone. Customers across Nigeria are hitting boiling points over endless service failures, from frozen accounts and tech glitches to unresolved fraud cases. But here's an angle from a banking insider. That's Mr. Olusoji Oluwole, is the national president of SBFI. It says many scams succeed because of greed and financial illiteracy. The Straight Talking Union leader made the comments during his appearance on Business Morning earlier today, suggesting some victims ignore red flags while chasing unrealistic returns. Take a listen.
We find out that a lot of people actually get compromised without them knowing. Some out of ignorance, some out of greed. The system has put in minimum requirements for security. So the 3 basic ones are who you are, what you know, and what you have. So who you are is your name, basically the username. It could be your full name, it could be your account number. Anybody can know that. The second is what you know. It's your password. Nobody else knows it. You're not supposed to share it. The third is what you have, which is like a one-time password or a PIN that comes from a device that is held by you and no other person. Right. But what we have found is that a lot of people, like I said, out of ignorance, probably, you go to social media, you see something is being sold at a ridiculously cheap price and all that, and then you go on, you click on the link, and it keeps asking you for your card number, asks you for this, asks you for that. In the process of putting in that information, you feel you are doing a genuine transaction, but what you're actually doing is that you are pushing your information to a third party at the back end who is simply taking it. And while you think you are doing that transaction, they're actually moving your funds out of there.
Yeah, I guess we all have to be careful in this new digital world so you don't give up all of your wealth. But to our first conversation now, in today's roller coaster markets where inflation, geopolitical tensions, and economic uncertainty, tariffs dominate headlines, how can investors stay calm and make smart decisions? See, Warren Buffett's timeless principles offer, some kind of roadmap. It says focus on long-term value, ignore short-term noise, and bet on quality. But how do these strategies hold up in 2025's volatile landscape, and what can everyday investors learn from the Oracle of Omaha when fear is running high? Joining me now is Dr. Ifeanyi Uba, as the head investment research, commercial partners. Joining me via Zoom. Great to have you on the show.
Thank you for having me. It's always a pleasure.
Fantastic. So definitely we know Buffett's number one rule, never lose money. It sounds obvious, but how do you actually apply this, in shaky markets? And, in the case of Nigeria now, when you get incredible offers, that tell you they're going to double your money in a short time, and you end up losing that money you're trying to double. How do you avoid all of this, or do you just avoid risk, at this point?
Well, you can't avoid risk if you want to make return. But if there's one thing we need to learn from Buffett, patience and time he used in selecting the right choice. Buffett right now is leaving a 364 billion, about that question mark for his next successor, because according to him, he doesn't like holding cash, but he doesn't see the right investment. He's not just going to throw cash at any investment. He has a saying, if you only had 20 stocks or 20 decisions to make for the rest of your life, you'll be very rich. So in this day of noise, cryptos, CX, and amazing return, what people can see to learn from Warren Buffett is streamlining their decision-making skills to just a few things that you are very sure about. And value investing takes the change, because Warren Buffett's strategy is to find a company that is undervalued and has long-term growth potential, and throw as much money as it can on it and hold it for as long as it can. That strategy has made him grow his funds over 5,500%, and we are talking about 37,000 times more than the S&P 500. Looking at a compounding interest of 20%, that is amazing. And we are not talking about crypto. This is somebody that is a seasoned investor that takes his time to pick the right stock.
It's quite incredible. You mentioned crypto. We know, I think he's referred to crypto as, rat poison. I think it was him, or was it Charlie Munger? But he doesn't like crypto. And is that a sign, for investors at this point? Is it, showing that there's really no value in crypto?
Not necessarily. Warren Buffett just says he doesn't understand. And he doesn't stick to further himself trying to understand what he feels he cannot understand. So streamlining yourself to what you understand. If you understand crypto and you can understand what it means for it to be intrinsically undervalued when it comes to the network, usability, use cases, then you're making the right decision. But if you're entering crypto just because you heard your friend make 300% and you want to put it to make 200%, you're having the wrong notion. We're talking about intrinsic value and long-term use cases. The cryptocurrency has shown that it has different use cases and it's still expanding. You see so many use cases from healthcare to transport, even in fine arts. That's why the NFT craze was all about. And even in gaming, the new GTA release is supposed to have a crypto payment platform. So you could see people gain and earn money. So if you're looking at investing a crypto or a cryptocurrency that will facilitate that kind of network, maybe you are on the right track in picking a crypto that has intrinsic value and long-term use case. So it's all about understanding the metrics around whatever you're investing. It's not telling you not to invest, but understand what you invest.
And talking about, not investing, we know, Berkshire Hathaway, they're sitting on a pile of cash right now. What would you say is his playbook, for waiting out, uncertainty? When should you, put that cash in, or, when do you just hold? Because we know holding that's something, at this point.
Yeah, so I think him keeping the cash shows that he still sees some trouble ahead. And given the global tensions and the way commodity prices are trending upwards, particularly gold, he's not off the mark at all. We are seeing accelerated tensions from China and US, but not just China and the US. We are still seeing crackdown in fundamental agreements from India and Pakistan, and which could also accelerate to something bigger. The Middle East is still having some trouble, and the hegemony of the United States is becoming to have a question mark. How long will the United States become the super dominant power? And what will it cost for a replacement? So there are so many dynamics, and him holding the cash is just showing that the the, the worst has not yet hit.
All right, so we know he also said, at some point that if you cannot invest in an asset class, if you cannot hold it for 10 years, then you shouldn't, touch it. How would you say a discerning investor, would know an asset class that they can actually hold, for 10 years?
Yeah, so like it's all about understanding the market, like understanding what you're buying. So let me talk about a business that's not listed in the stock market right now that has huge potential, even if it comes in the stock market. It's not a business I use, which is iFitness, right? So understanding the fitness business and how iFitness has taken the market share in Nigeria. If iFitness comes into the stock market, Nigeria stock market right now, and continues its expansion plan post Nigeria, post Africa, the 10 years outlook on a business that has solid fundamentals, good real estate, huge financing could be huge. It's not as if I'm looking at their books, I'm just making inferences, right? Mere guesses. But this is the kind of manner, this is the kind of tunes you should be looking at. Are you going to be willing to use it in the next 10 years? I think he gave an example of a chewing gum, like a gum factory, right? So he doesn't really care about the type of gum. He just cares that this gum company produces enough to control the market and they will still be available in the next 10 years. And regardless of the technology, regardless of AI, regardless of anything, will people keep on chewing gum? That's the same question we ask ourselves. People keep on using the business after 10 years. So if you can find, it's not so many businesses that are like that, but if you can find a treasure trove like that, you should keep it and not sell it for anything.
Yeah, definitely. Not easy, at this time. Sometimes you see an asset class and you're not just patient enough, to hold it, that long. 10 years is definitely a long time, but I guess I understand, where he's coming from. But let's pivot to gold now. Yeah, we're seeing, it did touch about $3,500 per ounce. We've seen a pullback to about $3,300. Do you think gold has peaked, or do you see a 3-5 retest coming?
Well, to be honest, with the global tension, 4,000 is a reality within this year or early next year if the tensions continue, right? Because we still see that people are start looking for alternatives to US dollar. And the most talked about alternative that is not yet in place is which currency, which is supposed to be backed by gold. And we have noticed that from the data from central banks all across the world, they have accelerated their purchase of gold. And this is not going to stop. So if the tension continues to increase, I do not see any bearish sentiment for gold.
Right. So, definitely we know gold thrives on, uncertainty. From what you're seeing so far, do you think uncertainty will stay with us throughout 2025?
There is huge possibility that uncertainty will stay with us throughout 2025, and we could see a breaking point in 2026. We could see a kind of would like to say a turning point moment where it's a make or break moment because the global tensions that are happening right now are reaching a climatic point, and we are seeing first of so many things, right? The Chinese economy has grown massively over years, and they have not entered any war. When last have you seen an economy that has advanced like that for 100 years without a single war? And tensions are cracking up in Taiwan. They are long overdue for a war. So if we see accelerated tensions or breakout of more wars, we could see increased volatility. That's why there's a huge question mark about where to invest, when to invest, and why to invest. The uncertainty is still there and evident.
Right, and definitely we've come into some years, when analysts, talk about, the expectations of volatility and uncertainty, in a particular year. But you find out that a couple of these risk assets, end up hitting new highs, in those years. Do you think 2025 is that kind of year?
Well, it's hard to tell. It's hard to tell when the assets will definitely rebound, but they would definitely rebound, right? So if there's one thing to know as a wise investor is to buy when there's blood on the street. If you can identify stocks that have fundamental values and can accelerate when the market is in an upward trend, you're going to see huge return, particularly now that we see prices as a discount.
And also, all eyes on the U.S. Fed. We're supposed to get that decision tomorrow. I'm guessing, are you seeing any chance, of a cut? Some say, the U.S. Fed chair is not ready to play to the tune of the White House, at this point. He's going to cut when he's ready to cut. What are you seeing?
Well, last I checked, the CME was to there was a 3% chance for the cut, and I think if we check today, the probably might have trickled down to a 1% chance. So I don't think because of the inflationary pressure that Donald Trump's tariff war has caused, we might see the Fed hesitate. But yet, the Fed still has to deal with the negative growth rates that was observed during the latest GDP. So it's depending on the interpretation of that particular data. On one hand, we could see it as when the data is revised, we could see that the GDP will move slightly up and turn positive. On the other hand, we see that the huge chunk of the negative decline in growth rates was because of the net imports, because people are trying to stockpile due to the tariffs. And if it's that, we could see the economy rebound later on and move up. So the Fed might not see any reason to cut rates. So it's depending on the interpretation the Fed gives to the data and the long-term outlook. But for now, we most likely think it's going to be a pause.
All right, I guess we'll watch out for that tomorrow to see what the decision will be. But I guess consensus is maybe another hold at this point. Thank you so much, Dr. Ifeanyi Ubah, is the head investment research at Commercial Partners. Thank you for coming on today.
Thanks for having me.
All right, we'll take a break now. When we come back, updates from what's playing out in most of the markets that we track. Just stay with us. Alrighty then, let's head straight to the markets now, find out who's doing well and who's not. We have John McQuarrie to give us those details. Welcome, Minnie.
Thank you, Laddie. So let's do market now. We see a little bit of drop for the NGX this afternoon. It's slight, so I guess we shouldn't be afraid. It's just 0.01, so it's very, very minimal. And we're still on 106,000, 106,692.81. JSE is also joining in that red market this intraday. It's down, lost to 92,000. We had about this time yesterday. It's now at 91,432. and it's down more than 0.5% at this time. For Egypt, it's positive 0.56% at 32,391.70. Nairobi closed yesterday in the green, sustaining the 125 level for that market. I believe we'll have a bit of details concerning the Nigerian market. Yesterday was a very positive close. It was 0.6, more than 0.6 at the close of trade yesterday. So I guess it's just time for investors to take a bit of profits. You know, that's what we are seeing at intraday. Before we go on with that, let's get to the Middle East and see where stocks are mostly positive at intraday. Dubai is positive 0.16%. Abu Dhabi is positive 0.16%. Saudi Arabia is unchanged, but you know it's on the positive territory at 11,423.37. Qatar is also positive, even though it's closed. Both of them are closed. 0.28% for Qatar. And in the United States, the S&P futures are steady. Ahead of that Fed meeting that Ladi was talking about, futures fell early on Tuesday. Investors are awaiting the start of the Federal Reserve's first meeting since President Donald Trump, and it's a big one for the world. So we see the Dow Jones in the red, just like yesterday. The S&P in the red. Nasdaq also in the red, almost 1% in the red. I wonder what tips they're hearing, you know, about the meeting and possible decision of the Fed, which is for tomorrow, which starts tomorrow. But the markets are in the red. But first, let's join Maria to give us details of yesterday's trade.
The U.S. stock market took a hit on Monday as the Dow Jones was down at 0.3%, the S&P 500 down at 0.6%, snapping its longest winning streak in over 20 years, and the Nasdaq was down at 0.8%. Many investors were a bit concerned about discussions over the weekend that could be causing additional trade wars. This has many wondering if the U.S. economy will be able to sustain as they wait for Federal Reserve decisions. These decisions are key and vital to interest rates, whether or not we'll see any drops in the next few months. Investors are watching to see if the U.S. economy will be able to sustain as the U.S. dollar has appeared to take a little bit of a dip.
So, we know that there's still, no confirmed word about the conversation that's supposed to happen between the United States and China on the trade tariffs, and that's also feeding into sentiments. Now, let's move to Asia, where Pacific stocks were mixed amid regional trade developments. The Nikkei of China is green. It was a green market this time yesterday, and we see another green market today. The Nikkei has gone up to 36,000, heading close to 37 in fact, after more than 1% in the green. The Kospi of South Korea is also positive, as well as the Hang Seng Index. Looking at other parts of the market, the Kospi is positive, as well as the Shanghai. The Nifty 50, which was a very positive market yesterday, I guess it's a normal cycle to see that once there's profit accumulating, investors have to take at least part of that profit. That's the essence of going to the market. So we see the Nifty 50 in the red today. Investors are assessing trade developments between the U.S. and the countries in the region. Focus on Asian currencies, that's reverse course, that to weaken Tuesday as the dollar appreciated again. India has reportedly proposed zero tariff on steel. Yesterday we talked about, big industrialists in India cutting a deal with the United States, and that was a major driver. All his companies, on the Nifty 50 drove the market to the positive. But today, we see that India is proposing zero tariff on steel, auto components, and pharmaceuticals as reciprocal basis, and up to a certain amount of imports, while Malaysia said that Washington had agreed for further talks that could be a cut in tariffs. So China may not have started talking about those tariff cuts with the U.S., but other countries certainly are doing that. Now let's come back home to Nigeria as we join Dr. Peter Abe, or he joins us to tell us what's happening intraday at this time. Dr. Abe, good afternoon and welcome to the program.
Good afternoon and thanks for having me.
Great. So we see a slight drop the NGX this afternoon, different from what we had yesterday, but I guess it's so minute we could ignore it, or should we be worried? What's trade looking like at this time?
Well, I suspect the last update you got, we had more updates on that. So at the moment, market has gained 1.06%. I mean, if you ask me the names that are driving the stocks, we've seen the likes of Nestle, ETI, and as well as MTN. They've gained almost 10%. I think investors are just trying to gets into most of these names, having seen the turnaround, especially coming from the negative, from losses that they had previous year, and the first quarter look promising, and investors are really meaning beyond the first quarter that it will be a good one going into the half year and also to the end of 2025. So we've seen investors taking position in most of these names, consumer, telco, and I feel this will also continue going into the remaining of the week.
Oh, interesting. But that means the impact of the results is, I mean, that's not what's driving now. Or what exactly do you think is driving this move by investors?
So I think if the results, yes, but also have to look at the sectors. I mean, if you look at the banks, yes, most of them declare good numbers, but compared to the previous year, it was more of a decline, more of a stability really, because most of the gains were seen from FX gains last year, revaluation gains. But I mean, looking at the consumer, which had losses previous year due to their foreign loans and the revaluation losses they have. So it's a sort of a twist. Investors are just looking at the names that are promising for now. Banks are just stabilized, but for the consumers, it's a more of a rebound, and investors see read mini beyond the Q1, and they feel that will also continue Q2 as well as going to the end of 2025.
Yeah, one could also say it's, I mean, we've seen a drop in the market, decline in the stock prices, and investors are just thinking, well, this could be a good time, irrespective of what's going on globally, and all of that. Nigeria's markets always seem to be isolated from all of that. Could it just be that investors just see, well, it's a good time because looking at the prices, to put some money somewhere?
You also agree with me that sometimes we have cycles in typical stock markets. Most of the time, we may bottom. I will not say bottom out, but I mean it may become attractive, low prices like you acknowledge. So some investors may want to come in again, and the cycle will continue like that. But definitely, we are not really shielded. We still react to most of this. I mean, the international and global issues, we still have that affecting us. But with the pause in the tariff from the US, I think, I think the major concern is just the crude oil price at the moment. Investors are really meaning beyond these numbers and going into the remaining of 2025, how they can position and have a good one for their portfolio.
All right, Dr. Abbey. So, I mean, from your perspective, it's a positive close for the day, I guess.
Yes.
Thank you so much for your time.
Thank you for having me.
All right, Ladi, so it's going to be a positive close. I know you have the stock market report later on tonight, so you should go get green, just to reflect.
Hopefully there's no switch, before the end.
No, we have said it's sealed. It's going
sealed.
to be positive, yes.
All right, there you have it. It's going to be green today. We'll find out, definitely when we report that later on. All right, well, we'll move on now and see what's playing out in Berlin. It's been quite a shock in Germany's parliament. This morning we'll get an update on what's happening there in Berlin later. But let's get some news now. We'll see in April 2025, startups across Africa raised a total of $343 million through about 100,000 dollar deals. That's over $100,000 and excluding exits, and that's involving 39 startups. Analysts say that's not just a solid rebound from a disappointing March. It is the second best April on record, beaten only by the funding days of April 2022 compared to last year. The difference is striking. Funding is about 4.5x from April 2024. A clear sign that investors, though they're still cautious, remain confident on the potential of the continent. And Egypt's non-oil private sector economy that contracted further in April after a decline in domestic and foreign demand. That caused new orders and output to fall for a second month. And that's according to a survey released today. The S&P Global Egypt PMI headline index dropped to 48.5 points in April from 49.2 in March, marking the lowest reading so far in 2025. A figure below 50, that indicates contraction, and one above 50, that definitely indicates growth. All right, I guess it's time to find out what's happening in the commodity space now. We see Nigeria's dairy sector, that presents a puzzling contrast, while we see yogurt prices, defying inflation, remaining stubbornly high at about 1,500 naira per bottle. We'll find out what's driving, because I like yogurts, definitely. I like to take yogurts, but we're seeing that the prices have remained, stable, despite the inflation that we've seen so far. We'll definitely find out what's keeping those prices, even though when you're trying to, buy, other forms, maybe like a parfait, we see the price of a parfait is really high. But let's find out what's driving that now. We have Miriam Ode, she's an analyst with financial derivatives company. Hello, Miriam. All right, we'll try and get Miriam back. But yeah, as I was saying, definitely we're seeing a contrast there. When you're seeing other forms, of yogurt at this time, they are, looking quite, pricey if you're comparing the prices from, say, 2024, to 2025. But I guess, looking at the yogurt plainly, we're still seeing, stability with that price. But, at the end of the day, we've heard economists, talk about inflation expectation. It's bad when, consumers just expect prices, will continue to go up, once they head to the markets. And, we've found that situation, happening in most African countries, still dealing with rising food inflation. But, we see the central bankers still struggling, to rein in inflation and, try to bring prices down to reality. But definitely we hope that this battle is won, in a country like Nigeria. But let's bring in Miriam Ode now, analyst, financial derivatives company. Great to have you, Miriam.
Good afternoon, Ladi. Thank you for having me.
Good afternoon, Miriam. So why are the prices of yogurt here, why is it defying inflation?
Okay, so yes, what we tracked actually was the 75 centiliter bottle of yogurt, but we're seeing that the price of premium or foreign yogurt has actually increased. And interestingly, even the price of sachet yogurt has increased by 33% year on year. And this is mainly because of the increase in production costs and also sourcing costs. And let's not forget that for the target consumers of the sachet yogurt, we see that there is more demand in inelasticity, meaning that an increase in its price will not necessarily result to a significant drop in its demand. And this is basically because of the fact that an increase in its price, this 33% that I mentioned for the past year, is basically just 15 naira. So it's easier for consumers to absorb this increase in cost without necessarily declining their demand.
All right, looking at, the currency now, that's talking about the Naira. We've seen the Naira, record lows, before now, but, stability so far. But, when it comes to, we're seeing dairy imports, that's still dominating at this point, but we're still seeing, currency weakness, depending on where you're looking at the Naira from. So how do you, balance that, and, keep those imports quite stable with prices?
Yes, Ladi, like you mentioned, a majority of Nigeria's dairy products are actually imported, and approximately like 80% of the dairy products in Nigeria, that's milk, cheese, are actually imported. So to compound this problem, we see that not only are the products imported, but also the raw materials used in producing commodities like yogurt. So what we're seeing is that the weakening of the exchange rate is going to increase import costs and also production costs for yogurt. And this could factor into the domestic price of yogurt. And we all know that once the price of yogurt or the price of any commodity increases, it is likely that the demand is going to fall.
All right, we'll definitely keep an eye on those prices to see if they keep, being stable. Thank you so much. That was Miriam Ode, analyst at Financial Derivatives Company. Thank you for coming on.
Thank you for having me, Ladi.
All right, let's go back to find out what's playing out with German politics. It got that shock, with the parliament this morning. The Bundestag had assembled to officially elect as a new government there. That's Friedrich Merz, and as the next chancellor, of Germany, but he failed to get the necessary votes. Let's talk to Lars Holter now with DW. Great to have you, Lars.
Yeah, hi, Ladi. How are you?
I'm fine.
Good being with you.
Yeah, great having you. So what exactly happened there?
Ladi, short answer is I don't know. This is a total shock what happened in the Bundestag today. Usually it's more of formality that the parliament gets together to elect the chancellor. But today, Friedrich Merz would have needed about 316 votes. His coalition counts a few more members, so it was known to be close. But there would have been enough votes for the man who, with his center-right Christian Democrat Party, had won the election some 10 weeks ago. But in the end, Merz only got 310 votes. He failed to get elected. And that is something, Ladi, that has never happened before in German history. No one can say exactly what happened because it's obviously a secret ballot. But it's likely that some parliamentarians out of his own coalition were just not willing to cast their vote for Merz. Now, it's no secret that Merz is not a well-liked politician. He's been around for a long time. He at some point interrupted his political career to work for the investment group BlackRock. Again, not a well-liked company. But putting aside likability, it did seem that Merz was on the right track when it came to tackling Germany's most pressing problems. And now we're looking at a delay here and some uncertainty.
Well, I guess these are times where we see things we've not seen in a long time or even seen before. But, what exactly is going to happen next?
Well, there will be a second vote. And Ladi, for the last couple of hours, the factions in parliament have been trying to hash out when that's going to happen. And we just heard that it will actually happen today at 3:15 our time. That is in just a little bit more than half an hour. They will have that second vote. If that would fail, there would also be a third ballot. It seems pretty likely that Merz will, in the end, still be a chancellor. And I would personally go as far as to guess that in this second ballot, they will push him through. But the problem is, obviously, he will now enter office in a weakened position, and that is unfortunate. We are living in trying times, and it would have been good to show some strength today. Instead, we will see a government weakened by a lack of trust, as Merz and others too will wonder who did this, who voted against him in that first ballot. Was it parliamentarians from within Merz's own CDU, the center-right party, the Christian Democrats? Maybe because they were angry over the party's 180 when they recently loosened the debt brake. Or did the dissent come from within the coalition's junior partner, the left of center Social Democrats? Did it come from people who felt they were overlooked when it comes to their own political future? There's probably a few of those people. Merz has broken with tradition as of late when he didn't pick mostly career politicians to serve as department heads and ministers, but when he actually recruited people from the business sector to be in charge of the economy, of digitalization, and such important departments. So anyway, now there will be another vote in just about a half an hour, and I guess it is very likely that parliamentarians will now accept Merz as a chancellor and vote for him.
Well, I guess we'll definitely be looking out for the new votes. But what would you say are the priorities, for the new government?
Well, Ladi, once the new government is in place, there's mainly two things. They have to deal with immigration and they need to jumpstart the economy. And to achieve that, and especially the latter part, they have actually already started. The coalition partners have agreed to loosen the so-called debt brake, which is something I was just referring to here. It wasn't an easy decision made within the CDU. The debt brake being a mechanism that for years has long hindered investment because the government was not allowed to take on new debt. But now they can, up to 500 billion euros for infrastructure alone. And then the coalition has also agreed on another 500 billion euro investment in defense. And that is also not an infusion just in national security, but also in the country's economy as well. And then they also want to allow businesses to write off investments faster, which might lead many companies to massively invest in new machines, plants, whatever. So there's obviously some very strong ideas out there. Obviously, Germany is facing challenges, not only this 3-year recession that we're seeing, but also the tariff threats from the US, supply chain issues. We have a lack of skilled labor, and it's definitely problems that have to be tackled soon. And certainly if this second ballot now goes through, they can hopefully start working on this right away.
And definitely all of this politics, impacts on investor sentiment. How are investors there, digesting all of this news?
Yes, Ladi, it was a busy day in Frankfurt too. Of course, the market had started pretty even, but then the DAX really nosedived. Once Merz got rejected by Parliament, the German blue chips had been doing okay before, then dropped almost 2% within just minutes. And for exactly the reasons you would expect, the market had expected strength out of Berlin, certainty in times that have lately been pretty uncertain. There's a lot of challenges out there for the German economy, the EU, and even the global economy. Tackling them now gets delayed, and that has investors worried. But now, as soon actually as we heard that there is a second ballot and that is happening today, the DAX has actually recovered some of these losses, and it is now doing a bit better again.
All right, we'll definitely keep tracking all of that. Thank you so much for bringing us up to speed. That was Lance Halter indeed.
Thank you, Ladi.
Thank you. All right, let's get a check on what's playing out in the crypto market. And from where I'm sitting, I'm seeing red on the screen right there with Bitcoin there, giving up most of those gains. 0.41% down. If you can put that up, you see Ethereum not left out, 1.88% down. So it's mostly red there with just few pockets, few little pockets of green. I'm guessing that must be, stable coins, but the funny part is USDC. That's not giving me a sign right there, but we know investors are quite, a little shaken at this point. All right, let's get a check on what's on the headlines there. We see VanEck has officially filed a registration statement with the U.S. Securities and Exchange Commission to launch the first ever spot BNB ETF. It marks a significant development in the altcoin ETF space, which has over 70 active applications. We also see U.S. President Donald Trump. He'll review legislation regarding stable coins and the adjacent market infrastructure as early as August 2025. And that's according to SWIFT's Chief Innovation Officer, Tom Schasch there. And Pi Network has surpassed 120 million downloads worldwide, with 1.3 million new users onboarded in the last 30 days. It's backed by a vision of decentralized finance for everyone. The platform was founded by Stanford PhDs and boasts of more than 55 million engaged users. Quite interesting there. I'm sure most people don't know about that Pi coin, and some expected it wouldn't go anywhere, but I guess it's making strides now. All right, to our next conversation, still on the back of crypto regulation in Nigeria. We'll get an update on how that's looking and how it's going in the country. Joining us to unpack this, we have Ayotunde Alabi, is the CEO of Luno Nigeria. Luno Nigeria. And he joins me right here, in the studio. Great to have you. So a lot is, happening, right now in this space. We're talking about, regulation, yesterday, and, we're still looking for that clarity. So far. So, we have the ISA, 2025 right now. With what you're seeing, so far as a player, in this market. Are we seeing headway, with regulation?
Definitely. I think the ISA 2025 is the necessary first step in the right direction. What we are seeing right now is, the ambiguity that has plagued the industry before now has now been put to rest by the ISA 2025 because the bill explicitly gives the SEC the absolute authority and autonomy to regulate the space. Also, the ISA has also recognized digital assets as securities, which is also a big win for the industry. So there are a number of things that are in that ISA that will propel the industry forward. There's also the issues. There's also the points around Ponzi schemes that sometimes it's very difficult for people to understand the difference between crypto and then Ponzi schemes. But now the ISA, the bill has helped us to sort of put that also in proper perspective, and we've also seen the SEC now leading from the front to talk about, to sensitize people about the Ponzi schemes, which is also a direct segue from or the direct impact of the ISA 225.
Right, and I remember with the former SEC chair in the US, there was that argument about either Ethereum or XRP, being a security, and we know most of these platforms, they fought against that. They say, no, we're not a security, and we're seeing that, here in Nigeria, they're now termed as, security. So is that really good?
No, I mean, it is. For an industry that has always operated within the shadows, with ambiguity, with lack of clarity, I think for the industry to move forward, it has to come under the ambit of a regulation or regulatory framework. And the closest framework or the closest regulatory institution that can sort of regulate that is the capital market. And for you to be a player in the capital market, then you have to align with the tenets of the capital market. And so we are happy in one way or the other to have been under a regulatory framework which will now propel us forward. Again, it is an emerging industry, so there are a lot of things that are even within the gray area. So for now, we'll take the win as the first necessary step to propel forward, and then we'll continue to sort of pivot from there.
Right, and talking about the SEC in Nigeria, we've seen them give out some licenses, but there's also this talk about the SEC not giving out more licenses to crypto exchanges. How are you seeing that?
No, I think it's an interesting perspective, but also if I'm to wear the hat of the regulators, the industry is also fraught with a number of good players and also not so good players. So the last town hall and I must commend the SEC, the current leadership of the SEC, because they've sort of gone ahead to continuously engage the industry. We haven't seen that in the past. So we understand again that there's a need, given the comments from the DG, that there's need for there to be a sort of level 3 due diligence, given that has come up from the initial assessment of the regulated or the admitted crypto exchanges in the ARI program. So currently, what we are expecting is a quick move forward from the two that has been admitted to the others. But again, we understand again that these things take time, the due diligence that needs to go into play. What we just want to emphasize really is that there are a number of players that are on the sidelines waiting for this regulation to come, and we anticipate a quick approval of the other players in the market. Because again, at Luno, we've engaged with the SEC for quite some time now, and we want to sort of foster that because again, we are particular about at the forefront of what we do is compliance, regulation, and also just maintaining high standards of controls within the system.
All right, and talking about regulation and government revenue, there's also that angle of tax that the sector can raise revenue for the government through taxation, but we've also heard that it's not easy to tax crypto. So how are you seeing that?
I think that's a very fantastic question. I think that's one of the significant impact of having this system, having this sector regulated. Currently, about 80% of the transactions that go on in Nigeria are done via P2P. And now with P2P, it is very difficult for you to track and monitor these transactions. Our platform doesn't we found out P2P because we sort of want a process where the government is able to understand exactly what the volumes are, what transactions are going through, and then tax appropriately. So yes, to your question, regulation will allow, and I think more the openness the openness of the license, opening the licenses to more exchanges and players will allow for the sort of the focus to move away from the primary market for crypto transactions, to move away from P2P into centralized system where the government can now have oversight functions and then tax appropriately.
Right. And, before now, maybe we cast our mind back to maybe 2016, 2017, where, the crypto industry was seen as, the full-on wild west. There was no regulation of any kind. You could do whatever you want. You could create a coin and do, anything. The exchanges could behave any way that they wanted to behave. And now we're moving into an era where, the government is getting involved and, regulation and, people being told what to do, in that segment. Do you think it's still going to be that exciting space with all of that, government intervention?
Absolutely. I think what is clear from the position of the regulators is that, and if you've listened to the DG talk about, how he's looking at the space, the intention of the regulators and the SEC in this instance is not to stifle innovation. It is, I think there has to be a balance, and I think that is what the DG is also pushing for. Regulation does not mean stifling of innovation. I think collaboration is key, and from the recent engagement that we've seen from the SEC, I think that is the sense that we are getting from the industry, that the SEC is not willing, the regulation is not to kill innovation. However, it is to foster innovation in a safe manner for investors and also for players in the industry. And
looking at the way price action is happening in this market right now. Before now, you could get as much as 1,000% in a short time. That's talking about profit, but that has reduced drastically, up till now. So will it get to a point where people just get used to maybe a 5%, 10% increase here and there, and maybe 100% top?
I think when the market starts to standardize, these are the things that you will start to see as more players are coming into the industry. Institutional monies are now flowing into the industry, and with that comes with a bit of stability, right? And also, people are now becoming more educated, understanding because of experiences of fingers being burnt. Because most people talk about the upside, but people have actually been burnt seriously as well. Lost a lot of capital. So people are now, piggybacking off of the experiences of the past to sort of take a measured approach when they are investing. And that is why you see that, again, crypto has now evolved. Initially, it used to be about speculative trading and, buying, and was sort of restricted to only techies and traders. But now you are seeing more use cases for cryptocurrencies. Remittances use cases in Nigeria, for example, the significant portion of crypto participants are for remittances use cases, like the stable coins. So again, it is now morphing into a standardized industry where ridiculous, things can no longer be happening. And again, when things come when regulation comes in, there is that, dual role where the regulators also would ensure that nefarious activities do not happen as a result of, just potentially irresponsibilities of some players.
And what kind of education do you think, people in Nigeria need, to get to a point where if they're offered, a scam platform or some kind of unrealistic returns, they actually look at it and say, no, I'm not putting my money in there. I'm smarter now.
I think the SEC is doing a fantastic job at that. Like I said, leading from the front, there's been sensitization, because again, there are two kinds of people that invest in Ponzi schemes. The people that know that they're going into a Ponzi scheme and hoping that they're not the ones that catch, the falling knife, and the people that are ignorant. And I think what the SEC has recognized is to, go into the marketplaces, to the more susceptible victims of Ponzi schemes, to go ahead to talk about, what Ponzi schemes are. And for example, if a return is too good to be true, then I think that they should know that it is too good to be true. Also, on our platform, we have a dedicated segment where it's tagged Learn. So we invest a lot in teaching people how, to do their research, to understand the market, and to spot something that is not right from far away.
Right. Do your own research.
Do your own
DYOR. Very important. Thank you so much, Mr. Ayotunde Alabi, the CEO of Luno Nigeria. Thank you for breaking it down for us today.
Thank you very much for having me.
Thank you. All right, so that's how most of the markets were looking today. We'll give you updates for the midweek trade. That's tomorrow. Don't miss that. Same time. We also have 10 a.m. business morning, and 1 p.m. We'll give you what's playing out in most of these markets. Thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ. This is bye for now.